Okay, so let's take an example. I've changed the name, but it's a real life example. We're going to call him Ted Lasso. I don't know where I came up with that name. All right, so Ted the landscaper, right? Ted the landscaper has a couple employees, right, and is out of New Haven, Connecticut. All right, Ted is netting about $150,000 a year on his landscaping business. Now, as a single member LLC, he's going to have about 20 on that 150,000. He's going to have federal tax of $25,441 and self-employment tax of $22,950. His total tax bill is going to be $48,391. If we convert Ted's LLC to an S Corp, we're going to have to determine reasonable comp. We run the report through RC Reports, and it says should be $57,274 a year. What that means, Ted's still taking the whole 150, but 57,274 would be reported as W-2. The other 92,726 would be reported to the government on his K-1 as dividends not subject to self-employment tax. This is going to save him in self-employment tax over $14,000 a year. I ran the report. This is only a screenshot of the top, but you can see the reasonable comp number right there. Now, let's be blunt. He's not going to put the whole 14,002 in his pocket. He's got to pay for an S Corp return and he's got to run the report every December. So let's say he's really going to put in his pocket an extra 12,000. Now, over 10 years, he would have paid the government 14,200. He would have paid the government $142,000. But instead, he's going to get to take 12 of that and put it into his own profit sharing plan. If the market returns 8% on average historical, in 10 years, instead of paying the government 142,000, Ted would end up with almost $200,000 in his own profit sharing plan. This is the power of the S Corp and the savings on self-employment tax. Now, yes, he is paying in a little bit less for Social Security, but I got to be honest, I gave you a screenshot right there. I don't know if Social Security is even going to be around in 10 years. No one seems to. All right. So we have partnered with RC Reports. Now, a normal RC report, if you go to run it, is $499. If you go to scorpadvantage.com, we've made arrangements. You can run this same report for only $399. Save $100. And this will show you what your reasonable comp should be. Look at your net income, and you can determine the savings that you're going to see year on year on year. I want you to take that money, put it in your pocket, put it in your own retirement account, and let's not only save you taxes, but put you in a position for retirement in a way better vantage point. The money in your accounts, not hoping Social Security will still be around. So again, go to scorpadvantage.com, save $100, and see how much you can start saving immediately. All right. This is the power of the S Corp. Hopefully, I've given you a little bit of insight into why this is such a popular and such a powerful planning tool. Okay, guys, thanks for joining me again. I'm Eric Green. See you at S Corp Advantage. Bye-bye.